In this video, we will go over all of your Tesla stock breaking news. I will share with you, in my opinion, what I think is coming next for Tesla into year end and what could be a Santa Claus rally. And last but not least, I will share this clip from CNBC with you. It's 3 minutes, 29 seconds long, so not too long. From Dan Ives here that says Tesla is the most undervalued AI name in the market and could hit $2 trillion in market cap. I talked about this in one of the last videos, but Tesla's big AI moment could be coming sometime soon. It could kick off with FSD V13, which is coming in just days. At least that's what it seems like. So if any of this interests you, sit back, relax a little while. It's a Saturday and let's talk Tesla. First and foremost, India plans to expand electric vehicle incentives to automakers building models at existing factories in the country instead of limiting the benefits to automakers willing to build new plants. The headline of this article says India to expand EV manufacturing incentives after Tesla disappoints. JP Morgan Chase agreed to drop a lawsuit it filed against Tesla 3 years ago seeking $162 million tied to stock warrant transactions. And I think we're all pretty familiar with Optimus catching these two balls that was posted to X. Now this was done tele-remotely, so somebody else was wearing sensors, controlling the arm, controlling the hand. And Elon Musk says that it's easy to move to connect AI vision with arm actuation to catch autonomously. Will be done next quarter. We are just testing the actuation and sensor system here. So Elon Musk says by next quarter, Optimus is going to be able to catch balls. No, that sounded weird. But catch these balls autonomously. That's a big lockstep improvement from anything else we've seen from Optimus so far. Redwood Materials founder and Tesla co-founder JB Straubel says Redwood is on track to hit $200 million in revenue this year, and that this year the company is pulling enough lithium and nickel out of recycled batteries to supply 250,000 EVs. And in case you did not know, it is officially the Cybertruck's birthday today. Delivery started of the Cybertruck 1 year ago, which doesn't sound like it's been that long, but it's been a year. Let me know down below in the comment section if you are starting to see Cybertrucks more frequently. Because judging off of United States search trend data, the Cybertruck has been the most searched about Tesla product by far over the last year, doubling that of the Model Y, and same rough stats are true worldwide. Cybertruck, not as impressive, it's not doubling the Model Y here, but it is higher by about 25% or so versus the Model Y. So there's a lot of attention still on the Cybertruck. Now, before we get into my perspectives of what's coming next for Tesla, I do want to share this clip from Dan Ives about Tesla's AI moment, the $2 trillion market cap opportunity. But I first want to just say, if and when V13 comes out, and it is good enough to launch the robotaxi network on, that is most likely when your AI moment starts. This is the ChatGPT moment, if you will, for Tesla. This is the moment in which Wall Street says, robotaxi is no longer a concept or a lottery ticket. It is actually reality. And the way that Wall Street is chasing AI names right now could lead to a chase in Tesla. Because if you're thinking about a company that is doing something with AI on a scale and scope similar to Tesla, there's nobody that stands out, right? There's no competition to Tesla for at least the attractability, again, the scale of how Tesla is trying to implement AI. Like nobody even comes close. And I think this could create a whole new wave of hype and excitement for Tesla that could well drive Tesla stock past new all-time highs. And actually, a $2 trillion market cap is Tesla stock well over $600 per share. So take a listen to this.
Joining us now, Wedbush Securities Head of Technology Research, Dan Ives. Dan, it's great to have you here on set.
Great to be here.
There's never a dearth of information in the tech sector for us to talk about, but I do want to start with the Microsoft piece of this, because we always talk about whether the market feels like this is 1999 poised for a 2000, and here we are talking about Microsoft up for regulatory review. That sure feels like 99, 2000.
Look, if Khan was staying, that would be a different situation. I think the view of us and the view of many on the street is that Khan's days at the FTC are numbered. I think you ultimately get a more, we'll call it even-keeled, business-friendly sort of chair of the FTC in there. And we just think bark's worse than the bite when it comes to Microsoft. Microsoft went through that battle in the 90s versus, DOJ and U.S. government ultimately won it. And look, you're definitely seeing the strong get stronger in terms of big tech. And as much as this is really going to be a UFC battle that continues to really play out between big tech, but I just think when it's all said and done, the noise is going to be more than the reality, not just from Microsoft, but I think even when it comes to Google and others.
How much is going to hinge, though, on the Trump administration, the picks for DOJ, antitrust, and FTC? Because there are a number of names floated for each of those positions, and not all of them are, I would say, rah, let tech go wild. Some of them are much more focused on antitrust and I'll call it maybe potentially a similar approach to what we've seen in the last couple of years.
Yeah, I think on DOJ, you definitely get someone probably in between. I mean, look, Vance is obviously anti-tech, so you're going to definitely have someone that's a little on the aggressive side toward tech. But I think the big issue is on FTC. Because Khan, for big tech, it has been a nightmare in terms of Khan at the FTC. Her being gone, which we believe is ultimately will be the next step when it comes to January, that's bullish for tech. I think, look, a big reason when Trump came in, when you think about Khan out at the FTC, that's bullish for big tech. I think less regulations. And then who's at the table right next to Trump? It's Musk. And I think that's going to also play a big role unofficially in terms of some of these picks and where this all goes. But I continue to think in terms of this AI revolution, it is 10 p.m. at that party that goes to 4 a.m. And I don't see any of these appointments that's changing that party or that party closes early. I think we have a tech bull market that goes well into 2025, 2026. And I think a lot of this sort of noise that we see here are more opportunities to own these names rather than time to get nervous.
Do you buy Tesla here then, given the rally we've seen, the torrid rally we've seen this month?
I think get the popcorn out. Because I believe Tesla's a stock that could ultimately double from here over the next 18 months. It's been obviously a parabolic move, but as me and you have talked about, autonomous itself, we think is worth $1 trillion. So when you think today, I view Tesla as the most undervalued AI name in the market. It is not ridiculous. It might almost be conservative to think, could this be a $500-600 stock? As the autonomous ultimately plays out, I think the margin story is definitely stabilized here. And I think investors, look, the haters continue to hate. They hate it at $50, they'll hate it here. But I think we sit here, and this will be sort of a golden star, in terms of when you look at the market in 2025, in terms of what we see for Tesla. I believe $2 trillion on the horizon.
Yeah, according to Dan Ives, one of the top rated analysts in the world, Tesla is going to be a golden star of next year. And this comes down to robotaxis. This comes down to what I believe will be the ChatGPT moment. And I really agree with what Dan Ives says here. For the most part, 2025 is going to be a great year for Tesla and probably other tech names, although I don't think it's going to be as good for the typical Mag 7. I think that's kind of played out at this point. Those valuations are a little too rich for a lot of people. I think cyclical small caps and mid caps are going to outperform. But I think the tier 2, tier 3 AI names are going to well outperform everything else next year. That's Tesla. Okay, for anyone that does not know, a tier 2 AI name would be like Tesla. That's deliberately using the, GPUs to create a software or service that is bringing them in money, right? It's tier 2. GPUs makers like Nvidia, that's tier 1. Tier 2 is people actually, or companies actually applying this AI. Tier 3 would be like in energy, right? Like nuclear power, right? That's tier 3 AI. That's not tier 1, tier 2, that's tier 3. Tier 4 could be something like actual uranium. It could be the productivity boost in different companies from actual AI. Like, imagine with Tesla, right? If you get to free up your time behind the wheel, what companies are benefiting from that, right? Are you doing more work on Salesforce? Are you being more productive at Salesforce on your computer in your car, right? That's kind of a tier 4 benefit if you wanted to make that distinction. I think tier 1, tier 2, tier 3, pretty easy to distinct out right now and to categorize. But there is also that tier 4. So I think right now you're in the stage of you're going to start seeing tier 2 AI names really outperform. And if you kind of want a blueprint for next week, I think it's what companies are bringing in the most AI revenue relative to their business, right? Meaning like Apple does $400 billion of revenue a year. Tesla does $100 billion of revenue a year. If Tesla brings in $5 billion of AI revenue, that's 5% of their revenue. If Apple brings in $5 billion of AI revenue, that's like 1.2% of their overall yearly revenue. You're going to see companies that bring in a higher percentage of AI revenue, of total revenue, do better. And I think that's where Tesla will really shine, because Tesla's not a small cap company. Tesla's not a small fry in this. Tesla's targeting a market that is massive. The auto market and the benefits that full self-driving and robotaxi could bring, not only are going to save 50,000 plus lives in America alone, but free up people's time, make them likely more productive, right? There's so many different benefits that Tesla is paving the way for that I think will start to be recognized in 2025. And I know a lot of people say, well, Tesla stock has went from $138 to, $345. That's got to be baked into Tesla stock already. And if I didn't know better, I would tell you probably. But I do know better. And that's the thing. EPS estimates are up a lot over the past, couple of months. They're up over 20%. Okay. And that's really what is preceding Tesla stock. Part of this has to do with Elon Musk guiding for 20 to 30% delivery growth next year. That's all the markets really needed to hear to send Tesla stock higher. Mix that with a favorable Trump regime, stronger perceived real economic growth, not just government spending economic growth, meaning bottom up can benefit instead of kind of the government picking and choosing what industries are benefiting. 3% GDP growth can be just a mediocre thing, or it can be really strong growth. Meaning if you're getting 3% GDP growth via deficits and via defense spending in certain areas of our economy, and this overspending from the government, that 3% GDP growth is really not being felt by people in the real economy. Now, if you're getting 3% GDP growth with low deficits and higher incomes, people are going to feel really good about that 3% GDP growth. And that is the upside surprise potentially for next year. And if we get something like that with lower inflation, more cuts from the Fed, 10-year treasury yields that fall, in Tesla's ChatGPT moment, if things go as I think they will inevitably, play out by the end of 2025, Tesla could be a almost $3 trillion stock by then. Tesla could be $900 per share. I kind of put the worst case scenario between 200 and 250. I put my base case scenario at $945 just because I think the momentum will run away from Tesla. Will it close the year at those prices? I don't know. I think most of us would be happy with, 500 or 600. And that could be a little bit more reasonable. Maybe Dan Ives is correct there. Maybe $600, 650, 700 is a little bit more reasonable. But I do think you will overshoot that. I do think you're going to see really the last of the shorts get squeezed out of their short positions, which, upon the last time I checked, which was a couple of days ago, short interest of free float was 2.72%, with $25.3 billion sold short in Tesla. There's a lot of room for this stock to move higher, and Tesla has a lot of option activity as well, which could help push the stock higher in a gamma squeeze kind of way. But do not be confused. There are risks here in our markets. Now, I don't see the risks as the same compared to a lot of what you're hearing right now on Wall Street. One big thing that I would say is markets are not euphoric. Okay, here's the kind of a bull market for you, the stages. Bull markets are born on pessimism, they grow on skepticism, and they die on euphoria. We've seen this in 2021. Companies just rallied for no reason day after day after day. That was euphoric. Today, markets are not euphoric. We're not even close to euphoric, in my personal opinion. Now, do we want to get to euphoric? Probably not. But markets are not euphoric right now. And the only thing people really have to say negatively about this market is valuations. And yes, we are kind of priced for perfection next year to a certain extent. Now, I say sometimes valuations do not matter, at least they do not matter in the near term, because nobody wakes up one day and sells a stock because of valuations. Valuations only matter when you get a downside shock, right? When you get a surprise. Really, it doesn't have to be a downside surprise. Markets can trade at really low valuations and you get an upside surprise. That only happens during recessions, though, and that usually marks the bottom of bear markets. So it's whenever the situation perception changes. And that's why I do think we will have a correction in Q1, because the perception that everything's going to be just fine is probably not correct. Okay, you're probably going to get some bumps to this. Now, if you look at the internals of our markets, the average stock is trading at historically average valuations. So if the average stock falls during a correction, that is by far a buying opportunity. That is not a time to be, selling out of everything in this market. Now, big tech, I'm not as excited about. I think that story, again, is just played out, and there's not that much exciting things happening at those names anymore. And I think your tier 2 AI names like a Tesla are going to outperform. I think cyclicals, if we get that really, kind of broad, inclusive 3% GDP, those areas are going to outperform small caps, mid caps. The only caveat to next year, the only way I think we have a bad year is if we somehow go into a recession. Now, I will tell you right now, with the Fed inclined to cut and Trump taking office, there's a high bar to me in terms of Trump's presidency, okay? The market, whether you like Biden or you don't, did very well under Biden. Government spending was a big part of that. Regardless, markets did well. People in markets made money. And the fact the markets did so well is probably, I would put money on it, the reason we have not seen a broader recession so far. So yeah, Trump has a lot to live up to. He doesn't want to be the guy that came in and wrecked the business cycle. So whether it's tariffs you're concerned about or higher inflation or this and that, the thing that I come back to is Trump doesn't want to be the guy that crushed the business cycle, okay? So whatever it is you're worried about, it's probably not going to happen if it threatens the business cycle. Too high of tariffs threatens the business cycle. It's not going to happen, right? Higher inflation threatens the business cycle. It's probably not going to happen, or at least they're going to try to do everything they possibly can to bring down inflation and reduce that risk. So I think longer term, people's expectations of higher inflation, destructive tariffs is incorrect. I think inflation will fall more than expected, mostly driven by shelter inflation and energy. Again, whether it's this cup, this coffee, this mic, this phone charger, you name it, just look around. If you did not produce it, oil was used to transport it, okay? So even from that perspective, as energy falls and stays low for a while, That's a direct input cost that is gone. That's going to likely continue to fuel some disinflation that we will see. And that will feed into everything over time, even like services. If you get your lawn cut, for an example, because a lot of people do that. A lot of people don't want to cut their own lawn. Not the point. What powers a lawnmower? Last I checked, it was gasoline, unless you have an electric lawnmower. But still, even then, that the energy markets are very correlated, right? So, in other words, I'm optimistic next year for the things markets are fearful of today. I'm not as optimistic, at least in the near term, of the market's perception of the economy next year. And I think that's where we are vulnerable in Q1 of 2025. And I do think we will get a correction. But from now until year end, I mean, just look at Tesla on Friday. It was up 3.69%, up 0.07% in after hours, closed at $345 per share. 340 was a big level we wanted to close above. The next big level is around 350, this trend line here. If you close above that, then you're likely going to new highs for, the last couple of years, breakout, maybe even to new all-time highs. We'll see. But there will be a correction at some point in the start of 2025. But from now into year end, the path of least resistance is higher. S&P closed at all-time highs. You were up 0.62% in regular trading, up 0.1% in after-hours trading. Markets want to go higher, and I don't think you want to fade this just yet, although raising some cash, getting ready for a correction, it's not a terrible idea to do. So in terms of Tesla, I'm still bullish on Tesla. I still would not be surprised if Tesla is at all-time highs by the end of this year or very close to that, because I do think we're not even close to euphoric yet in markets. I think people have forgotten what a euphoric market actually looks like. 2021 was euphoric. This is not euphoric. People might say it's euphoric off of valuations, but it's not. I mean, look at the AI investor sentiment survey. People are bearish right now. Bulls, 37.1% as of November 27th. That was 3 days ago as of today. That was taken on Thursday, Thanksgiving. People are not bullish. 24.3% are neutral and 38.6% are bearish. 38.6% are bearish versus 37.1% are bullish. This market is not that, euphoric or optimistic. And I think there's a long way to go before we're actually to that point where we can sit here and say, yeah, we're too euphoric. I just don't buy that, and I don't think you should either. And the fact that there is this much skepticism, this many people that are bearish, probably is the fuel that the markets need to move higher, as people do throw in the towel towards year end and say, well, I've been bearish, I've been wrong, I got to get in before 2025 because I might miss the next 20% year. 20% gain for the S&P. So these are just my thoughts. Again, let me know what you guys think down below in the comment section. It's my opinion. Thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.